All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, and I'm definitely happy and grateful for all of you being here with me this evening as we take a look at the technicals and the fundamentals as they relate to the Forex market to see what we can take advantage of. So, without further ado, please turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. This group is excellent at participating and engaging. So let's keep that going and drop me a one in the chat if you're all ready to go and we can get things started. Awesome. All right. So for our newer folks, hey, everybody has control over their microphone. The only thing that we ask is that if you're not asking a question or making a comment, please do me a huge favor and make sure that you keep your microphones muted, just out of respect for everyone else. So we are all set with that. So let's talk fundamentals. So trading economics, we can see that report came out today, everybody, that U.S. factory activity grows more than expected. Well. That doesn't bode well for the interest rate hike deniers, right? Because that's just one more data point that kind of supports the Fed's raising rates. So we know tomorrow, if we take a look at the Forex factory and we scroll on up to Wednesday, we know that here in the United States, not only do we have the ADP non-farm employment change for private businesses to see what the numbers look like employment-wise, kind of the precursor to the non-farm employment numbers that are going to come out on Friday. But we also have the FOMC statement and the federal funds rate, and then the FOMC press conference. So we are expecting rates here in the United States to move from 3.25% to 4%, meaning that we're looking at 75 basis points, okay? So we know that this is coming. So what we're going to be looking at tomorrow, what our eyes and ears are going to be locked in on, is what's going to happen during the press conference. If they're going to try to change their tone a little bit in regards to forward guidance and monetary policy and future rate hikes, because everybody is out here trying to bet against the Fed, seems like, try to figure out when exactly they may pivot and when they may slow down or halt raising interest rates. But we're not seeing that series of data points yet that support any type of slowdowns, right, in regards to the interest rate. So interest rates not continuing to raise. So we'll continue to watch out. The numbers today didn't support the Fed backing off an interest rate hike. So we'll see. We know their number one priority, right? Got to have stability in the market, but that inflation number, got to get inflation back down, right? The target, 2 to 3% target, still a ways from that. So we'll see what happens tomorrow during that press conference. All right, already expecting 75 basis points. All right, so that's the main thing for tomorrow that's going on. So don't be surprised if you start to see the market may have already started to do it, move a little sideways ahead of the big FOMC federal funds rate announcement and press conference. So that typically happens. So just don't be patient in the market, and just know why if you don't see the price action that you're looking for, that may be the case. Okay. And so what else? We see the New Zealand unemployment rate unchanged. Australia's shares climb as commodities lift. Okay. And what else? Commodities push higher in Canada, so it's commodity day today. And then that's just plugging into what we were just talking about. So all eyes and ears will be on the rate statement again tomorrow in the United States. So that's that on the fundamentals front for now. Big day tomorrow, and coming up at the end of the week with non-farm payroll. Also, let me go back because we did come in the 31st on Monday with a rate statement, right? So we got 25 basis points out of Australia. So the Reserve Bank, 25 basis points raised it, and we talked about that, right? When we covered those fundamental notes, saying that they are going to look at potentially raising rates in smaller increments, but more frequently. coming out of Australia. So not those huge rates that we saw that they raced to do to keep up with the Fed. So they did increase it by another 25 basis points yesterday. So you saw the Australian dollar really didn't do too much, right, as a result of that. So we'll continue to keep an eye on it. And that's just about it. Any questions in regards to fundamentals and what's upcoming for tomorrow? No, good.
No.
On top of things. All right, appreciate it. Appreciate it. So let's get rocking and rolling. We're looking at the dollar, right? Bouncing around. Go ahead.
So why I feel like this is a silly question, but why
No silly questions.
If the Fed said what they said, why do people try to think that they're not gonna do that? Like, what is?
because some people think, well, some people are just always, you know, I guess what should I say? What's the word for it? Are skeptical when it comes to the Fed. Plus, they're just thinking forward, right? Long-term investments and things like that. When might they pivot? They want to try to line themselves up for that. Okay, because at some point they will pivot, right? When people start feeling the squeeze and they do have those data points to line up to where it's like, okay, we need to back off, they will. So people try to, it's about probabilities, right? So people are trying to run the data, you know, to try to figure out when exactly certain subsets of data will reach certain target points so they can be prepared over the long term, because these folks they're not retail, they're moving a lot of money around, and they have to position themselves for that, whether it be through hedging and, you know, all types of stuff. So that's one of the main reasons. And then there's people who think, just, you know, some people think the Fed lacks credibility. They think they were dead wrong on COVID, dead wrong on the whole transitory thing, right? We remember when it all broke and inflation started going through the roof, that, hey, it's just transitory. And then they had to roll into, hey, this is a permanent thing. Okay. I'm one that's on the side that says, how can you couldn't have predicted COVID, right? Yes, we had the supply chain bottlenecks. They were looking on the positive side to, hey, okay, vaccines are working, the numbers are starting to come down with COVID. But then what happened? A war breaks out. Unless you have a crystal ball, that's kind of hard to. So I understand why they were saying they thought it was going to be transitory, because they thought the supply chain, once the COVID numbers came down, the supply chain bottleneck issue would start to alleviate itself, but it didn't. We had a water breakout. So a lot of people thought that they should have been hiking rates a lot sooner, to try to get it under control a lot sooner. But that's a lot of Monday morning quarterbacking, as they say in sports, you know, after the fact. You know, it's kind of like a politician who runs for office. They promise all types of things, but when you actually get in that seat, it's a little bit different. So, you know, so that's some of the reasons, but we'll see how it goes. But I'm not one to bet against them. If they say this is what they want to do, and we keep seeing data that comes through like today, I expect it to keep, you know, for them to keep hiking rates to get inflation under control. You know, I don't think they've done anything so aggressive to the point where they've shocked the market. You know, they cause a major shock to the market to just spiraling into a super fast, right, recession, right, to where it's just boom, the floor falls out. I haven't seen anything like that. So we'll see. I mean, globally, everybody's starting to hike rates, and we haven't seen any major drastic shift. You know what I mean? We keep hearing the fear and the panic, but it's like it moves in waves, right? It's just one day it's a rally, and the next day it's not. Yeah.
Like, okay, so when is it, like, just watching it? It's like, okay, so we're not watching it, but just like, well, when is that doomsday happening? But like you said, it still moves in waves regardless. So
yeah, and then look, a lot of people are jockeying for positions. It's a lot of people that are sitting in position to make a windfall when the market falls apart and everything goes bearish and we do, right, hit that recessionary stage that everybody keeps talking about, that keeps stoking the fear about. You have people who are true bears, and they've been waiting for this market cycle to turn for a long time so they can make their money. So it's just it's a give and take. It's just the ebb and flows. That's why I believe in the wave sequence so much, because you just watch it play out on the charts, in a sense. So great question. Great question. It's amazing to listen to Bloomberg and watch the people go back and forth over what they think is going to happen. So I get a kick out of that. But yeah. Any other questions? No, we're good. All right. But I see all of you, Ebony, a lot of you starting to share different information in the Telegram group. I think that is awesome. I think it is awesome, right? We want this to be just one big think tank, right? The more brains on this thing, the better. No one person has all the answer.
It really is, isn't it? To continue to learn. It's a lot, but it's cool to also share.
Yeah, it affects our everyday lives, right? Whether you're trading or not, it's affecting you, right? What's going on, Shauna? Welcome. All right, so here's the dollar index, right? We're just hovering. We're just in that range. So we'll definitely see from the daily perspective, we got a stochastic. Our momentum is back in the buy zone. We've got a bounce off of that support level that we keep talking about, right? Nice double bottom. And now we're kind of just hovering, moving sideways. So we can see that we got a nice neutral candle closing out the day today. And then we can see what's going on right now in the Asian session. So I don't expect too much to happen between tonight and tomorrow. You never know what breaks out in the world these days, but I know everybody's looking forward to the rate statement and everything coming from the FOMC. We can see here on this swing from the weekly, where it's like, hey, we're right here. We hit this major level and we're just stalling a bit. We're just stalling a bit. And that should be a new fit. Now that should look like this. All right. Maybe not. Depends on which one of those candles were higher. Maybe we need this week to close out. Not sure. Let me check. I might be wrong on that. 1, 13, 556, 555. Yep. So that should be a new fib on that, like that. Okay. So we're right at the beginning when we look at the weekly. Okay. So we got misalignment with the stochastic, but the weekly, we have to remember that's a long term. All right. So we'll wait to see what kind of reaction we get from tomorrow's data. So that's that. There are a few pairs that I want to key in on and take a look at. Anybody, right? For the evening, I know we talked about it in the morning, but anybody trading the 5-minute setups that we're sending out? Joy, yes. Okay. Ebony, no. Ebony in those big swings. Drew, yes. Right. Yep, love them. Reese, I hear you. It plays out the same. It's just faster, right? Cassandra, know you're in swings right now. That's cool. That's cool. So even if you're not trading them, watch the price action, because you'll see, right? If the more and more you stare at a time frame, the slower and slower it gets. A lot of people think, hey, that 5 minute is very, very fast, but the way we trade it with the sequence and putting the fibs on it, it's not as fast as you think. And they play out pretty well, right? Michael just watching as it plays out. Awesome. That's good. That's all part of the game, right? A lot of times it's best just to sit back and observe, right? Then determine how you want to play them. Reese, let me ask you this: are you keeping tight stops on them, or are you using wider stops? I like to use wider stops because it's a lower time frame, so the distance isn't that far, right, in regards to the risk. You use tight stops, okay. Okay, yeah, I know you're in and out of stuff. I typically keep mine because I still could trade a pretty decent position. But since I'm on the 5-minute, it's not like it's a 200 pip stop or anything like that. So, but all right, so let's jump into the charts here. We're going to look at, I'm starting these Aussies, and I want to take a look at an Aussie NZD. We know that the longer term swing on this thing has been down, right? We see how that's playing out. We didn't even get the high right tip on that crown, but we know that we spotted this a long time ago. And from the top of that zone down, 538 pips to the downside. So we got a slight pullback, very shallow tip, and then we continue down. But now we are at the support level at 109.19. So when you move to your lower time frames, you can start to look at your wave sequence and how it plays out. So here's that move over 500 pips. Here was the pullback, right? Just about to the 38.2 on that swing, hit that 118 zone, pulled back, and then we moved down, okay? So we're getting close to that D, all right? We're getting close to that D extension there. It's been a beautiful ride, but we're into support. So if you come down to the smaller wave, you can see here, this was the previous, okay? Look at the ABCD wave, everybody, right? Just see the flow, okay? Whether you're trading with the trend, counter trend, right? It's something there for everybody, right? There's that C, which gave you an 80-20 on your one, right? AB boundary, shallow retracement, broke it, pushed down to the 118, 127 zone. That's a classic 80-20. Then it moved up, and then we hit our D. We hit our D extension. And what do we have, everybody? Okay, nothing magical about it. It's just a Fibonacci sequence. So A, B, C, D. Our C becomes our new A, our D becomes our new B, and we do the same thing all over again. Now we're coming into the support right around this 118 zone, okay? Stochastic is not back in the buy zone yet, but anytime you get that new fib, especially when you get that B boundary broken, start thinking in your head 80-20. So, right, it becomes an easy adjustment off the one, bang. You guys see now that's been with us for a while, right? These happen on every single time, okay? So there's something for everybody. If you're a swing positional trader, it happens on the daily and the weekly chart. Happens on the 4-hour chart, 1-hour chart, like we're looking at here. Okay, we get them on the 5-minute, 15, 1 minute. It happens over and over and over again. It's amazing. So now we're looking at what, right? So now we're in this zone. So we know we don't have to mark up, right, a B boundary play like so. We don't have to do that, right? Because we already broke that B boundary. So now we're just thinking here, we're in the zone. Does it hold that support? Do we get that push? And then that push back up. Okay, like so. So that's what we're looking for, an 80-20 play. Now how you enter it, whether you use a cloud, whether you use a trend line break, whether you just enter, use a limit, use a wider stop or whatnot, that's totally up to you guys. All right, we've taught all of that in regards to entry techniques. This is the zone. All right, so if we come off this weekly support, there's 111 pips to the 382. If it pushes deeper, it gets to that zone, somewhere in that zone, you're looking at 138. Of course, we've got two options on the 80-20. If you're looking to trade with the trend, then you're waiting for a high price in your sweet spot as it relates to your trade plan. Okay, so that's another one. We'll make sure we get that one posted in the Telegram. And we'll wait and see how that plays out. Just be patient, okay? And right, you don't have to go back far to see where it happens, right? We just had it occur, okay? So just be patient. Put that one on your radar, all right? Been in it since 1025, Shauna. Whoa, getting it done. It takes a minute to gain that patience, but once you get it, you got it. Congratulations on that. Yeah. What'd you say, Shauna?
It only took me a year and a half.
Hey. I think it might have took me longer than that. Everybody drop Shauna's sevens in the chat. Congratulator. I think it took me longer than a year and a half.
But you know what, Uncle Betty, I think I accidentally stayed in it so long because I've been so busy trying to move. I kind of forgot about the position. So
So hey, sometimes those are the best ones, right? We talked about that before. It's like, man, I forgot about some trades and I walked away. And that just lets you know psychology. A lot of times we just get in our own way. We just get in our own way. Because I know that's me. I call Ryan all the time, like, man, like I got out that trade. Why? You know, and I'm talking 2 weeks later, you know, like, man, that trade is still running, just like we projected. And it takes a while, you know, and then there's some folks, hey, it might not, it might not be your thing. And that's okay, because you could just do the same thing on the lower time frames and it'll move a lot faster for you, you know, but that's beautiful. Congrats again on that. So that's where we are, looking for now a swing and a correction somewhere in this zone, right, to the upside, just like that. All right. So there it is. There it is. That's the Aussie NZD. I want to do a quick check-in on the Aussie CAD. And just, hey, still falling bearish, right? So we get those corrections and those pullbacks. Look at that break. It pulled back to retest the zone in the area, pushing right back down. And so Aussie CAD is still falling over the long term. Here we are on the daily, 61.8, still making its way down. It's slow, stochastic back in the sell zone, but that's ultimately our D extension. All right, down around that level, we come to the 4. Okay, hey, you draw it up and you let it come to pass. Okay, we got a reaction off of 382 here, and we seem to be trying to push downside off that 382. But when you look at the larger wave, you actually got a 61.8 wave there. Okay, 61.8 pullback, I mean there. Okay, and so still looking bearish on the Aussie CAD. Any questions on that?
No.
All right, appreciate you. All right, and I did want to look at the Aussie dollar. Okay, just look, we're moving. Okay, still moving. All those days that have gone by, we're still moving to the downside. Okay, it's just how the market moves. All right, so if we come in here and we look at the daily, we can see the current fib. Beautiful price action. Okay. Right now we're holding below that 65 level. Okay, I listened to a lot of trading sessions, podcasts, things like that. Everybody at 65, right? If it stays below 65 on the Aussie dollar, right, they're looking to stay short. If it gets back above, some folks are looking for longs, right? But we are down with 64, and there's that daily D extension. Okay, see? Now we come down here to the 4, look at the correction that we got. So you see how powerful that is. Look how it hit this level. Okay, how it hit that level. 80-20 zone there. Okay, came into that level, and we got a reaction. Okay, 382, 61.8. Now we seem to be turning over a little bit in the zone. Okay, so we may be tomorrow. It's an Aussie dollar pair. Okay, Aussie dollar pair. Tomorrow may push sideways until we get the news tomorrow. Okay, but that's the position that we're in. And this is me. I just took, because it was so choppy for a while, I just took the 4-hour fib and brought it down to the 1. So it's looking the same. Okay, but even within this, if you go down and you look and you run your fibs, okay, on the 5 and how you find these setups. So you find this low here and you just start running your fibs. Guys, you just got to experiment with it. Look at that turnover. Boom, right? Let it do the work for you. Okay. All right. See that? A got taken out. Look. Same thing over and over again in the market. Okay. You gotta just get out here and discover, right? Look, boom, TP 1, 2, 3 takes out that A. Okay, boom, gone. Now this fib here, down AB boundary, price action took out the A. Look at the 80-20 swing on that. Okay, all day long. TP1, TP2, TP3. Right? That's how it goes. See? Over and over and over again. So we come to this low. Nope, I don't want that one. Zooming out a little bit. Watch how you track it. Okay. See, I took it out. It's gonna run into the downside. See that? Right. Get us all the way up to the last fib that got taken out and where we are currently. See explosions off those 118, 127 zones in that B boundary. Okay. Look at price turnover. See, the key is always knowing what to look for. Once you learn what to look for, you got it. Okay. New AB boundary is the ultimate reset. Okay. Look at it flowing. See, once you know how to frame things out and you know what you're looking for, look at all the setups that you have. Everybody follow me on that? Drop me a 2 in the chat. Cassandra, drop them 7s for Cassandra since 1026. What? Folks in here learning.
Yeah, this was one of the ones we looked at last week. Yes. Patience, patience, patience.
It does. It does. And it pays too, right? It pays.
Yes.
Congratulations. Congratulations. So look at this move here. All right. And this is why, like, if you want reps, so we had it right. We like to, when we started out, we were like, okay, we take them to the 1 hour, they can get a lot of reps in regards to watching the Fibonacci sequence. But we realized that the 5 minute can give you some price action too, right? When you learn how to train your eyes and what to look for, right? You see how many different waves and things and that you get and patterns you get on the 5, right? So in the beginning, we thought like, man, that might be too fast for the group. But some of the feedback we get is actually not. So look at this last move here, okay? Look at this last move on this fib. See at 118, 127 zone. You see how it came up just shot at 382 and pushed up to this level and came right back down. And look at that price action there. Okay. So how I play these a lot of times, right? Because I'm busy too. I'm not sitting, even on the 5 minute, I'm not sitting in front of my computer. So a lot of times what I'll do is the way I get in and out of these is I'll catch a B boundary, right? And I'll play it, okay? Because then I use it. The percentage on these is pretty high, right? For those of you who've been trading them, you probably see that now, right? In regards to the strike rate on these. So that's 43 pips there. That's 75 pips there. So you could come out and you could say, you know what? I'll do, right? Especially for my intraday traders. You know, a lot of times when you're just in and out of a trade, you could do a 1-to-1, right? So you could put your stop there at about a 1-to-1, okay? Put it at a 1-to-1. All right. So all the times I'll come here and I'll break my order up. I go in market execution at the B boundary. I know where my stop is at a potential 1-to-1. The next thing I'll do is I'll put a sell limit right in between that 118, 127 zone. Okay. And I'll put my stop above outside that 118, 127 zone. Oftentimes when you do that measurement from the B boundary to the 382, typically, depending on the pair and the ATR, it'll take you outside of that zone. And so I'll enter it when I'll see it. Okay. So say you put in, depending on the size of the account, you put in 30 cents, 20 cents, whatever you're trading. Even if you got a small account, you put in a dime, 1 micro, put a sell limit at 1 micro there. And then you set your take profits on those. Market execution, I do TP1 or market execution TP2 or however you want to do it. And then you just let the trade run, right? So if this one pushes up and goes in the drawdown, right? I already know what I'm risking. Maybe I got a 0.5%. Then I'll let it pick up that other 0.5% at the 118, 127 zone. And then if it works in my favor, good. If not, I'm stopped out. and I'll just let the trade run, right? So that's how I like to play at times. So, or if you have time, you know, then you play your cloud, your trend line break, or however else you want to do it. But that's how I do it. It's kind of a set and forget it, you know, even on the 5 minute, which is similar to how I trade them anyway, period, on the higher time frames. Everybody follow me on that? Drop me a 3 in the chat. All right. And then I'm out. Right. So now I'm not playing with you know, with 150, 200 pip stop losses. Even if you put strike rate is higher, even at the D, you give it room, right? At the D. Because you know if it don't hit that D, it's coming down anyway, right? So you guys have to play around and experiment with that. Like I said, you keep it at like a 1-to-1 to your first target or whatnot, or you just put it wide, trade small and put it wide, let it float. Okay, the strike rate is pretty high on it. It's pretty good. So, but this is where we are right now. So this A got taken out, which means it hit all 3 TP levels. And so now, right, you just start running your fibs the other way, and you'll see where we come out at. All right, that list. Hold on. See there? See how this got taken out? A got taken out, boom. And then if you run it this way, see, look. Oops. See how I got choppy? Then when you put that, finally get that fib that's active, and choppy, it gets taken out. So this is the current fib. All right, that's your current fib. So we worked it all the way back. And that's how you find them. And just roll with it. Okay. Quick technique that anybody can do. And we already see how this spiked up to the area. So I wouldn't be looking to take that now, even though you may get that correction. Just leave that one alone. So that's a no play on that one. But then you just wait, right? So what is this going to do, everybody? It's either going to push down, it becomes simple. AB boundary, okay, that got erratic right there. So it's either going to do what? Push down and come up and make a decision either to get back short or go long. Okay. Or go long. If it does that, look at the game that's being played. If it does that, the A is going to get taken out anyway. And you're going to be looking to do the same thing the other way. Okay. It's a fun game to play. Or it's going to push down right now and hit the D. And guess what? If this is going to be the highest point, I'm going to get a C and I'm going to get a D. And you're going to be in the same position to do it again for another sub. That's it. All right. If you're hey, I'm bearish on the Aussie and you want to play this here, right? That short, once it gets into that zone, okay, then put your stop for the A. See if it turns over once it reaches that high price to fall over. All right, like that. Then you guys, once you get your risk management down, once you fully understand the sequence, it's game on. Any asset class don't matter. Right? So that's where we are on that. So we're letting that hang. So for example, I'll show you guys on and we posted this in the Telegram, right? This was that 5 minute Euro USD. Look at that swing. Boom. All right. Look at that swing. 67.50. That's a 5 minute chart, everybody. So look. Hey, I got a new AB boundary. Boom. Right there. Okay. Put it to 118, 127 zone for the swing. Bang. Stop at the D. It turned over. Look. 2 TPs. Just like that. Okay? Just like that. Now, again, when we put these out, we say, hey, you got 2 options. Well, Benny, long higher time frame, we're bearish. So I just want to stay bearish. Okay, you got it. You got that. Well, when you get this set up in the Telegram, You say, okay, I'll wait for the high price. It gets in my zone, right? Gets around my zone area, I get short. Put my stop above the A. So I'm rolling with the trend, right? So now I'm up above the AB boundary. My downside target is the D extension. So rolling with that trend, my D extension is going to be here. Just like that. Boom. I always put my extensions right before my take profits right before the extensions, right? So there. Now that move up around that zone up against that trend line, that's 97 pips. It moves up, down, and sideways. That's it, everybody. Fib sequence kind of frames it out for you perfectly. Cassandra, yes.
How are you dealing with news on the 5 minute?
On a 5 minute, always check it. I check my Forex factor and everything every morning anyway. And you want to check it. It's a great question. You want to check it before you get into any trade. So even if it come out in the afternoon, check to see if it's any news. Know that if you get a setup late in the afternoon, hey, is it going to get range bound on me? You know, but I still use the same risk management process. You know, so I'm good no matter what. But you don't wait for on your 5 minute. You definitely want to wait. So tomorrow, it's something. If we saw a setup and we put it out, and we know that we've got, you know, that rate statement coming up, you know, just leave it alone. You know, let the dust settle on it, because it's a 5 minute chart anyway. It's going to push it in one direction or the other, and it's going to be a new setup before you know it anyway. That's how it moves on the 5. You know, that's how it moves. So, you know, and then of course, if you long-term swing trading, you can use these little setups and give you an idea of how, hey, maybe I want to add to my short position off this 5 minute fib. Okay, so universally, there's something there for everybody. Like this might be my chart that I want to add to my Euro USD short position.
Mm-hmm.
You know, because look, we're moving. We've been moving short. Of course, we get pullbacks. See here how that's pulling back, right? And this latest fib gave us a 382. It's going to be interesting tomorrow, but you can see how we formed a new swing high in this zone, right at parity, right? Got a nice little railroad track right there.
Yeah.
Right. So, you know, and our stochastic is in the sell zone. So we'll see what happens, what comes out of tomorrow. All right. And right, you look at our 4. Okay. That's where we are. Just taking its time. You know, and then this here, isn't that pretty? Right? Playing that retracement. Look at that zone right there. Can't make this stuff up. Right. Fascinating. Right. Look at the correction, right? You can play that on the 5 and then look at the drop off, right? So there's plays within plays. So there's your larger 80-20 move there, right? On your 1. Okay. Something for everybody. Right. Okay. So out of that zone, okay. Same thing. Right. Bang. Okay. Some people only play the 80-20, some people take that beat boundary. Okay. Oftentimes I'll break my setup up, put it up above, and just let it turn over. The market likes to find a C. I mean, if you do it enough, you rep it out enough, you'll see that that's true. The market loves to find a C. Like, look how it pushed up, and then look how it corrected. Right? So just out of this move here, on your 1 hour, on a 1 hour chart, that's 161 pips. It was a sweet trade on the buy up, for sure. For sure. Kim, it's gonna be easy for you too. Appreciate the feedback. It's just a repetition, doing it over and over and over again, going all the way back, right? going all the way back, saying, you know what, right? Go all the way back and say, man, I'm gonna clear this off because I need to redo it anyway. And say, you know what, February, January, just playing around and seeing the chart tendencies. You know, here's January. Okay, right? This is what we did. We'll come in and we'll say, all right, somewhere around January, there's a January high. You know what? I'm just gonna map this out. Okay. All right. There's the recent high. Okay, look. See it? Bang. Took out my A, right? Here's my A. Look. And the reason why we tell people to put the work in is because that's what helps you build the confidence. Because that was the toughest part for me. Like, okay, I know this stuff, but actually pulling the trigger to put my money on the line and to do it consistently and to live with the results, that's where everything was getting messed up. That's where I started, you know, oh my goodness, I lost. Not understanding that losing is part of the process and you have to become a good loser. I didn't get that at first. So then I'm like, well, I need to find me another strategy. Because I thought I had to win it 100% of the time. I had to be right 100% of the time. So then you lose a couple of years just out in the wilderness. but you eventually find your way back to your foundation, right? Because there's no denying that this market moves in waves. Right? So you can see how, look, it took it out. It took my A out. See that there? So what I'm gonna do is I'm gonna take this swing and bang. So I'm not looking at these because I'm running it to the upside as a result of the A being taken out. So what I'm doing is I'm looking for this fib. This is where the price action, right, took out my A. So this is irrelevant. This was in the AB boundary. So now I'm looking at this fib here. And look, if this is my setup, okay, there's my 382. There's my B boundary broken. There's my return, right? And that's why I typically, right, I'll use like wide stops and smaller lot sizes because I can't control all this. Who can predict this right here? Nobody. But the price action still moved my way to the downside. See? So look, this got taken out. All right. So bam. Right. Look at my price action. Here was my A, B. Here's my A. Look. Okay. Here's my price action that took out my A. Okay. Look at the fib and the reaction we got. We didn't quite get to a 382, got close. But look at that, to the downside. Now look, A, B, C, D, shallow, impulsive. But look at the turnaround, look. Boom. Okay, so do you win them all? Nope. All right, that one right there, turned over. But look, there's the set. These are the setups, right? Can't make this up. Can't Photoshop it. This is what it is. Right? Look at what happened when this got taken out. Look, see how I swung up? Boom. Okay, then. It's the same, it's literally the same stuff over and over and over again. Okay? All the way up to where we are in real time. Okay. That's it. See, look. Okay. And once you get used to it, you can see where the lows are. Okay, so took that out. Look. Look at the U-turn. Price action takes it out. Look. Okay. Look. Like an 80-20 to me. I can't control all of this and how price travels to its destination, but I can control identifying the zone in which the U-turns could occur, right? And the high probability setups. I can't control that. So what I can do is control my risk management, where I place my stop and find in the zone. See how that turned over? Took that out. Okay. So we know what happens, right? We start running it to the other side till we catch the active fib, right? Which is going to be right here. See that? We just got to find it. Oops. No. Look at the swing. Okay, moving sideways, it gets choppy. Okay. Look at it. Look at what's going on, right? We know, look, out, sideways movement. I know, just to find the next high. Right? Missed there, right? We took you out, but look at your U-turn there, okay? That's why we say oftentimes when you get an impulsive movement, you don't get a huge correction. See how this gave us no pullback and went straight to the D? Oftentimes the next fib or so, you get a huge correction. And look how that swung and took everything out. It's almost like it's making up for the price action that it missed. Okay. Then we come here. And this is just on one time frame. This is not using top-down analysis to where from the top down, you already know where your current fib is, which is up here. This is just using a one time frame and scrolling through. See? Now, if this is going to continue down, think about how it all comes together. Is this, right? We see the up fib because it was moving up. Now, if this is going to continue to move to the downside, like so, okay, like that, then what that's going to do is everything will come into alignment eventually. All right. So this is because of the retracement and everything that's been going on. We've got an up fib here currently. But guess what? If this continues to turn over like we just saw on the daily, then it'll take this A out. And now what are you going to have? You're going to have a new fib to the downside. So now my 1 hour fib is going to potentially be in alignment with what? My 4 hour, my daily, and my weekly. See? Now all my fibs will be moving down to the downside. See? Like so. Okay. If it's time for that to turn over and continue to fall. All right. Things get hairy and you start getting fibs taken out and new fibs happen, and then it gets taken out when the market is moving sideways because it's not trending. All right. But if it's time for this to trend back to the downside, then it's going to take that out. And now I've got a down AB boundary moving short. And that's how it goes. Right? And you discover that when you just go through the sequence. Right? From January on through. Okay. Those are the setups. And that's when everything becomes slow motion for you because you see it enough. Any questions on that?
No.
I just wanted to add that when you mentioned slow motion just now, I just had like a epiphany, because that's really how, when you become a really good trader, you have to slow down, you know?
Mm-hmm. Mm-hmm. Absolutely. Absolutely. That's an awesome comment. You do. You do.
Yeah.
You got it.
Sorry to interrupt you. Basically, I've just started watching this today, and I'm from the UK, so I'm just
welcome.
Yeah, man. Thank you so much for that, man. Appreciate that. I'm just literally just catching on to the lesson today, so I could just follow on to see what you guys are talking about. I'm really new, so all this so far, it doesn't, you know what I mean? It's I'm just familiarizing myself with this. So yeah, I've just literally started yesterday.
Oh man, well, welcome to the inner circle. Thanks for being a part. Glad to have you from the UK. You guys got hikes coming up too, right? For interest rates. 75 basis points potentially. Yeah. So we'll see what happens with the pound. So you guys got a new prime minister. What's the sentiment there? Everybody relieved, happy, uncertain?
It's orange at the moment, so it's uncertainty, but he's the best that we've got from Boris. So at the moment, he's doing a good job. It's still early days, but we'll have to give him another quarter and see how he does.
Yeah, for sure, for sure. Yeah, I could dig it. I could dig it. Thanks, man. Appreciate it.
Yeah, man. No,
Yeah.
it's just
Yeah.
that pound. Sorry to interrupt you. I was just saying the pound also, as you can see, has been getting a lot more weaker. So that's saying the pound is literally going out the window.
I know, right? And I know it corrects itself and then it just continues to fall eventually. So we'll see. We shall see. But hey, welcome again. And hey, we've got all those videos in the back office inside the Inner Circle platform. So whenever you get time, just check them out.
Definitely.
Yep. Appreciate you. All right. So now let me see. I wanted to take a look at this Euro CAD, I believe. And how this, right? We can see, let me go to the Euro CAD on the 4. Right? You can see how we're coming into that zone and you see the turnover. See how we got into that sweet spot. So look at the correction. Right, that moved up, and now we're back below that 135.67 level, and we're pushing down. Okay, so let me okay, so there we are, right there. So that's your Euro CAD holding below that level. We're in the sweet spot zone, right? So we just track it. Look at the push up. Look at the swing out of the zone, and now look at what it's trying to do. Right, so you want to continue to see if we watch to see if we continue to get lower lows and lower highs in the push down on the Euro. Okay. So we've got a break there. So continue to watch that. All right, moving to the downside. And here, okay, you can see how get that out of there now. We pushed up, and now you can see how on the 1, you zoom in, right, from the higher time frames, you can see how we have an inner trend line break. So we've gotten this 50% pullback. So we naturally expect it to move to that 1.618 here at 133.79. So it's moving down until the market tells us otherwise on the Euro CAD. Any questions on that? Jeremy, good for business. For sure. All right. Euro Swiss. All right. So we come out and we take a look at this thing, right, on the 4. See how we're just hovering, right? You see how this is a classic example how we've gotten that downtrend and we've got these ABCD moves, right? So we come and go look. A, B, C, D, right? Okay. A, B, right? Hold on, messed that up. D, right? Look. A, B, C, D. Okay. See that? And you see how it just resets. A, B, C, D. Well, what happened? Price reverse. Took it out. Took it out. So now, this move up, we came right into that 80-20 zone and it's hovering. Okay, see that there? And pull us out. Okay. And now you see how, look at the reaction. Look at the impulsive move. We didn't get to that D. We ran into resistance and look how we're settling again. So there's a possibility for that price to swing, right? To swing to the downside. So when you're counter trend trading, this is one of our sweet spots, right? One of our sweet spots in this zone. So out of that zone, your 118, 127 zone, you look at it and you say, you know what? That's a play back down to the 382. Okay. Over 100 pips. 180 almost to TP2. So that's where we are. Okay, so we'll continue to see. Maybe we get a little range bound. It won't break that 98.65 just yet. So we see if we can get a continuation down on that. All right, and then that's what it looks like on the 5. Your 5-minute wave. See? Right. Just smaller waves. Look at that. Okay. Those are opportunities, either with the trend, okay, to the upside swing, or counter trend. Same thing. Same thing. Very simple approach. Okay. Very simple approach to the market. The key is just having the patience to wait until that price action hits your zones that you want to trade. Okay. All right. I want to take a look at this Euro GBP because it's hovering at a level. Right. This was the 5-minute setup. We'll go from the bottom up. Right. That we spotted a while ago. You see how we got the price action to swing out of the zone. Okay, you see that? TP1, TP2. Now we're turning over. This 85.63 level is key, right? So let's zoom out and take a look at it. So this is what it looks like on the daily. Okay. We got some strength in the euro, then we got the correction. We're sitting here. 85.63 level, right around that 786 retracement. Okay. We are bullish, right, in regards to the stochastic being in the buy zone. But when you come down to the 4, this is just a clean price action look. Horizontal support and resistance. This is what it looks like. Right now it's holding there. Okay. So we want to see, right? Do we break? Do we continue to break down? Keep our eye on the fundamentals. We know we got rate hikes coming for the pound. Okay. Or that level I've been eyeing for quite some time is I'll look to get long, right? Some of you may be more aggressive off the break. And as soon as we break and start making higher highs and higher lows, there you go. Me, on the other hand, because it's been in this range, I would love to see it break above 88.67 to get long. That's my play on that. Otherwise, we're looking forward to fall short. Okay. So still between a rock and a hard place on that until we get some price action either right below this 85.63 or we get the trend line breaking, we start moving up. Any questions on the Euro GBP?
Can you show your fibs on the 4-hour? I just want to check them against mine.
On the 4, I think I took them off and I just focused. I gotta put that back, that level back. I think I am. Let me see something here. Because I'm using this daily fib for the most part, like this. Now, you've had a large retracement. Okay. Oops. Hold on, getting everything messed up here. So I'm gonna mark that high out like that. Okay. So this has been my play. So I predominantly use this daily fib down through the time frames off that last impulse move like this. Like so. Like this. Okay. That's what I'm looking for. And this has been the correction, right? To the short side like that. Okay. Okay. But we're moving along this 85.63 level. Okay. So if we break, then we look to potentially continue to this D extension off this down fib running here. But my 4-hour fib to the upside is the daily fib transferred down. That was the cleanest look for me. Like that. Okay.
Okay, got it. Thank you.
Mm-hmm. You're welcome. So we're in between that rock and a hard place. We're at a good level for a correction, right? Correction has made it all the way down, taking back about 78% of that impulse move to the upside. That's what that represents. Okay, it's getting close, not quite there yet, but we're up against the support level. So there's a possibility that this can go either way. We know we just got rate hikes out of the Eurozone, but we know the challenges that they face, right? We know the challenges that the UK faces, okay? So we'll watch it. We'll watch it. I'm not ready to make a move on it yet. I'm not limiting in. I just want to see some more price action. I want to see it, how it reacts to this 85.63 level before I decide to move further along with it. So no play on it right now. I'm just sitting and waiting, right? We know if it continues to move down to the downside and targets that the extension, it's going to take that A out. It's going to take the A out. We're looking to the downside anyway. Okay. All right. So when you look at this trend line, right, it becomes what? My sell zone versus my buy zone. Okay. All right. That's there. I have to see what's going to happen. All right. So that's the Euro GBP. And I wanted to take a look at this Euro NZD down for some reason. Yeah. So you can see, look at how it plays out. Look at it spin out of the zone. Didn't get to that D extension. See how we got caught range bound? We've been watching this one for quite some time. See how we got range bound in between these two daily levels, 175, 283, and 170. And then look, we got the breakdown. Right? So next level 167.73, and then we've got a 382 here. Okay. If it wants to continue to move to the downside. All right. So 382. And there's your 61.8 level. Okay. Amazing price action. Okay. Look at that, how that's pushing out of that zone and coming down. Here's on the 1. Look at the trend line break. Right. Draw that inner trend line straight through your highest point. Okay. Straight through your highest point. Look at your break and your turnover. We're coming in on a D extension right along this support here at 167.73. All right. Can't get any better than that. And a beautiful move to the downside. Ebony, finally. I know. This one did the dance, didn't it? All right. But we know it now, right? We find our zones, plan our trade, we trade our plan consistently. We use proper risk management so that we're far from being over leveraged, because we know on these large swings, we can add to the positions later in the move. But let's get it going in our direction first. We identified the zone, boom, is there in our sweet spot. Let's stick our toes in the water, see if it wants to move in our direction. I don't want to be over leveraged while this is chopping around. That's a headache. But if I drop in 1/4%, 0.5%, I can live with that. And it's not going to top my account. I can go look at my other setups and my other trades to see if they've reached their zone for me to get in. Right? While this plays out. While it plays out. That's the game. Okay, so we got an inner trend line break, typically inner and outer, coming into support and a D extension. All right, so we may see a reaction there and a correction, all right, before continuing down if that's what the market wants to do. But great job, everybody. If you've been holding this, you finally broke the level.
I was eyeing this on the 5-minute queue just now.
Mm-hmm.
And it was in an 80-20.
Yeah, this one is just dancing, isn't it?
Yeah.
Mm-hmm. So right now, if you're eyeing it and you see it and it's gone beyond this 80-20, right? We know there's a potential, hey, this may head to the D. But when you do that, right? So now you can say, you know, well, I can either draw what? My trend lines to see if I can get a trend line break. Okay. Like so. Okay. All right. Get more aggressive with that trend line if you want, but you got room. Right? That breaks, you got room to that level. So you don't have to. Or you may say, you know what? Okay. Maybe. Right? You can put your cloud on, whatnot. Okay. Sideways and choppy right now. Cloud doesn't do the best in those conditions. But if it settles out, right? Yeah, it's super choppy. See how it's moving through price? Right? So that's not the best scenario. But it can settle down. And if you start to get everything to line up and it gives you a strong break above, you see that one, that fooled you there. It's a little false breakout and pull back. But if it happens again, maybe you take the shot on it. Okay, maybe not. Okay. But I would draw a decent trend line there, like we had it, and see, right, if it wants to give you a move to the upside there. So your inner trend line, this is the lowest point so far, so that's not going to be. Your inner trend line would run like this to the lowest point, but it's moving sideways. Oh, it took it. Never mind. It took it down, right? So you could just watch that. But right now, that's just a mess, right? You get that out of the NZD and the Swiss pairs sometimes. But that's where that is. Hadn't hit the D yet, but we're beyond that 118, 127 zone. So it needs to make its mind up. So if that U-turns and wants to go back to that 382, right, it's 188 pips there, right, to the upside. And then if it hits the D, we know what happens. The game resets again. Right? We look for opportunities. Okay. So just continue to be patient with that. And we already took a look at this Euro USD, so we know that's to the downside. So that's what I have for this evening, everybody. I hope that it was a nice drop for sure. It was. Any questions on anything that we covered tonight? I know we went fast and we covered a lot, but those little drills kind of help you build confidence, right? To elevate your trade game. So I hope that helps somebody going through that little exercise. All right, we got hands raised. Let me see who we got. Turk.
Yeah, so these lines that you put in, but I'll eventually find out what I'm going to be doing with this course. But them lines that you put in, I think they're the Fibonacci lines. What do they do?
Which one? These levels?
Yeah, you do something and you put a red line in, and then the graph comes. Yes, there you go. That's it, like that. Them lines there. What do they represent?
Yeah, these are retracement levels, right? They're like hidden forms of support and resistance. So it's a measurement, right? So
Okay.
if this is right, this move here is 100%. Okay. So if this is 100% move, this impulse move. The Fibonacci sequence, right? The math helps you to measure it out, right? So we like things at a discount, right? Yep. So if I'm looking to sell, I want to sell it at the highest price. So this is going to track your levels. So if this is 100% move, how much does the market take back as it corrects, as it retraces, right? So this first level is 23%. So does it take back 23% before continuing? 38%? Move this out of the way. 38%, 50%, which is really not a Fibonacci number. It was added to the Fib tool. 61.8%, 78%, 86%, or does it take back 100% of the move? Right? And from this, you can correlate, right, when you're trading with the trend, the projection, which helps you set up your take profit levels. Right? So I know that if I see how it has it here in red, if price pushes to any of these levels and then continues to the downside, my correlating projection is here, right? 1.618.
Yeah,
okay.
I see that.
Yeah, so if you're a swing trader, this helps you with the math, right? So it's really, right, when you think about it, when you learn through some platforms, it's that AB, right, equals CD move. Get what I'm saying? See? AB equals CD, and you got the correction in between. So I know, right? These are, like we like to say, are energy trampolines. So the further price retraces, the less energy it has to the downside. So if it retraces to 78%, it takes back 78% of this downside move here that's framed out with your AB boundary. Then I just switch my projection on the TP, right? So if there's less energy on the downside, then my correlating extension, right, based on the math, 78% equates to a 127 extension. See?
Yep.
And if it pushes up and it takes back 86%, then I expect a 1.18 extension. Okay. See what I mean? So once you get in the setup, my AB boundary is concrete. Boom, that's my foundation. Right? That's why we love seeing those set up, because it gives us an opportunity to say, okay, how do I want to make my play? Right? So my AB boundary sets up. The only thing that's going to float is my C and my D when I'm trading with the trend. Right? So your C is your deepest point within the AB boundary. So right now, this is my C. Right? That's my C. And so my projection is still, if this decides to push now, I know that I'm looking to potentially stay in this trade, okay, off this level for 974 pips to the downside.
You know, I've been doing trading for a while, but that, how you've just explained that makes sense. So where you've just said from A to B on your left part there, that little graph where you explained it. Of course, you're talking about retracement, wasn't you? So you get a deep retracement, and for every drop you have, there's a pullback to a certain point, isn't there?
Yep. So
and then of course, afterwards, then you've got like a little move afterwards. Like you said, from, you know, you got black to black, and then you've got green to green and red to red. Okay. If I'm correct me if I'm wrong, please, because I'd like to know more, definitely.
Yeah. So so once you understand the math behind the fib sequence, right, it gives you your targets. So if you learn how to use the fibs properly, the fibs will help you determine your direction, where to get in and where to get out. See, so when you're doing your framework, and this is when you develop your trade plan around it, it's like, okay, I like to trade at these higher levels, which the smart trader fibs map it out for you. But the key is learning on your own the numbers. So if you're using TradingView or anything else like that, you still understand the correlations, right? So my sweet spot, 61.8, 786, 50, right? If it's in the zone, that's going to help me with my risk to reward, right? So you have two places. I put my stop above the C with the understanding that if I put my stop above the C, I have a higher probability of being stopped out. And that's cool if you can live with that. Hey, I like tight stops, right? Some people like tight stops, right? And if you're that type of person, just know that, hey, my strike rate might be a lot lower, but my risk to reward will be ridiculous, right? So if it turns over now, and I've got to stop here and I enter at this level, and however you decide to enter the trade, if it turns over now, so you enter around there, that's 94 pips. Well, the potential on that is 900 pips, right? So, or you could trade smaller, right? Which we oftentimes suggest, especially in the beginning. You put your stop above the A, and I like to trade 61/8, okay? 61/8, your 786s, like that. Why? Because as long as price, right? People that's been with us for a while know it, right? As long as price doesn't take out your A, it has no choice but to go your way. So I could put in a 1/4% order here, another 1/4% order there, right? As a sell limit or something, okay? Or use both as sell limits. And when it hits this zone, as long as it doesn't take out the A, it's gonna go my way. Now, how long it may take, I don't control that, right? But if my initial entry here is at a 1/4% and it decides to push up to the 786 and takes me in. Now I got 2 orders in, a 1/4%, that's a 0.5% total. If it stops me out, I know I lost a 0.5%. Okay. But the upside to this is this: trade small, and as it moves in my direction, I can add to the position on the pullbacks, right? Because I got 900 pips that I'm moving.
You've got plenty of time. Yeah.
Yeah, you got plenty of time, so I don't have to put the house on the initial positions. Okay, right? So I'm at a 0.5% if I get stopped out on both positions, right? Or a 0.5%, 1%, whatever you set it up. But my upside potential is ridiculous, right? So now my risk to reward, right, is in my favor consistently. Right? See?
Yep, see that.
So the higher I let price retrace, I can put my stop out the way and my risk to reward is favored. See, if I'm entering off of 382, if I put my stop above the A, right, not as good, not as good. But if I put it above the C, yes, right, and I enter the 382, then I have to put my stop above the C to make it all work out, but I have a higher probability of being stopped out. Because we can't control all of this and how price wants to travel. We can't. People think they can, but they can't. Right? So there's a couple ways to play that. So that's with the trend to the downside, and you can see how it plays out, right? So the key is you have to set a trade plan up for yourself to determine, if I'm trading with the trend, which levels am I going to take? See how this move pulled back to a 382? I don't trade 382s, so that wasn't my move. But I'm not worried about it because I'm looking at all the pairs. So there's always something that's setting up. And these moves are so big, I don't have to be in everything. Right? These are monsters, but you see how this pulled back to the 382? And the price and the momentum took it right to the extension. See that? 700 pips. And then you see how price reacted off that level. And it pulled back again. See that there? That's the sequence. See, so a lot of times what you'll learn is like this, right? So we're able to catch all of these waves in between on this impulse leg. You see that? Right? See us catching that? See those smaller fibs? Right? But you'll watch traders and they'll say, they'll do what? Pull your fib, and this move has been so long to the downside. They'll say pull it from what? The stream high and pull it all the way down to the low, don't they? Find a high price and pull it down till you get to the low. That's what they'll tell you. And now you got this big, huge fib on your chart, right? But look at all the waves that you missed in between. This is after the fact. How do I pick this up? So what they're telling you to do on this 4 hour, they're telling you to, when you go from an extreme high to an extreme low and you miss all this in between, what you're doing is overlaying a higher time frame fib on a lower time frame. And people don't realize they're doing it, right? So this would be like pulling a daily or a weekly fib down to my 4 hour. But that's after the price action has already happened. Right? We want this. Right? We want a piece of this that's going on right here. Right? So yeah, man. Great questions. Again, glad to have you. When you get in that back office, you'll see you have those aha moments, right? Those light bulbs will start going off, and then you can come here to the sessions and say, hey, I watched this on the video, I didn't quite get this, I'm not understanding that. We'll be more than happy to answer your questions for you.
Yeah, it's I've literally just watched I've watched the one video so far, and I literally like everything I'm hearing and seeing so far. So I've got quite a bit to catch up on, definitely.
Awesome. And my partner Ryan's not on here this evening, but he always will tell you, give yourself some grace. You're running your race, not anyone else's. So just give yourself some time, and you'll get it. You'll get it.
Definitely.
Yeah, for sure. Appreciate the feedback on that, Kim. So yeah, this is what it's all about. And once you see it, we always say you can't not see it. Right? It all comes together. So, and it works on every time frame. So any other questions, anybody, before we close out this evening session? Nope, we're good. Y'all had enough of me tonight. All right. So with that being said, we'll be right back tomorrow, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. Everybody have a great night.
Good night.
Thank you.
Good night.